Hey guys, it's Ted. It's January 31st, um, episode number 6. Yeah, quite a week in the markets with GameStop and hedge funds and shorting and options and Reddit subscribers really putting the squeeze on hedge funds. So quite an exciting week, to say the least. Not going to really go into too much of the news itself. I just find it that these kinds of moments are what I would call those exogenous moments. This is not a one-time deal. I don't think this is a flash crash. This could actually be substantial. So I am actually going to be making some, or I did actually make some changes to the portfolio this week on Thursday, and I'll go over those things. But the two topics that I want to talk about today is going to be about volatility and about Warren Buffett's rules in investing. In particular, I think the number one rule, which is very, very important to remember all the time when you're investing for the long term, is don't lose money, meaning don't lose your principal or try to keep the downside loss to a minimum because let's just face it, if you lose 50% of your portfolio, you're going to have to get a 100% gain just to get to even. So never forget that. That is a lesson that for a lot of people they don't learn when they're really young or when they're really new to investing. But it's a really painful investment lesson when you actually have a lot of dollars at stake. For somebody who's kind of more approaching their retirement time, this could really put a pinch and really hurt them from trying to reach their goals, especially when they're more advanced in age and they just really don't have the time to be able to recover from those kinds of losses. All right, so let's get into it. All right, guys, so let's go into the portfolio. Let's talk about the changes, the pretty major changes that happened this week. So the index ETFs, we got out basically all of it. So the 100% position, so the 2,500 shares that we had in FXI, the S&P 500, and the Dow, the dividend Dows names, all those ETFs we got out 100%. And this goes to the first topic that I want to talk about, which is basically Warren Buffett's first rule, which is don't lose money. And the second rule is don't forget about the first rule. So basically, what he's trying to tell you is that a lot of people psychologically they get super emotional about losing money, and so if they lose, call it like 1, 2, 5%, 10%, they tend to make some really bad decisions, which means that they'll just go into complete lockdown and just say, I don't even want to look at the numbers anymore, and then it just continues to go down, 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 and they just don't do anything about it. They just become almost like paralyzed. And so we don't want to be put into those kinds of situations because we understand and we respect the stock market movements. And for this week, obviously, I don't believe that this is going to be just like a one-off type of event, which means that the Reddit community is only going to be going after GameStop, and then it's just going to stop from there. Because with every generation, it seems like everyone always gets to have like this one-time moonshot of making a lot of money, and it doesn't stop until a lot of people start losing a lot of money. And I just haven't seen I don't see that happening right now or this week. And so because of these huge hedge funds have to cover all their shorts. It's basically creating a huge disruption in the markets, and it's causing them to having to sell all a lot of other positions that they have on other stocks and indices and stuff like that. So by doing so, it's really driving down the overall market. We don't want to be left in the dust. Now, again, like next week, this number could go straight back up, and it could recover for a few days. But we're not going to take that risk. The main reason why is because we're looking at this number right here, the VIX. So the VIX is looking towards future volatility on the S&P 500, and you can see here. I mean, it really has moved quite a bit over the 30 level, which we're really uh, you know we don't want to be at. And so this week again, like I saw that the S&P was trying to recover on Thursday, but it just did not keep. So basically, at towards the end of Thursday, I just got out of all the our ETF positions, and then I'm just waiting for a better time to get back into the markets because it's a little bit too reckless right now. So just going back into the VIX, this is the second topic I want to go into. You can see that for the most part, oops, let's just go 6 months. For the most part, it's pretty much stayed in that 20 range. And then I looked at when it bumped up to 40, and I didn't really see any sort of something newsworthy. I mean, probably a lot of like economic information that came out in terms of like high unemployment and all that stuff. But for me, those kinds of they're gonna move things up and down all the time, but they're just not sustainable sort of events, which could cause a huge amount of downside risk. Today, I think that it could actually turn into something pretty ugly, meaning that I could see definitely like a drawdown of 10% or more, and and when I see that, something that's more sustainable, that can really affect our portfolios, I just get the hell out and just wait for things to calm down a little bit, because right now is just definitely not the time to be started to add on to your equity positions. And now again, like definitely next week things could change and it could recover quite a bit, but the trend just does not look well, with the fact that like you could have a lot of these Reddit guys just moving from GameStop to Bed Bath and Beyond to BlackBerry, to AMC. You have no idea. So, my recommendation is just to stay out of it and just kind of wait for a little bit better time to get back into the markets. So just wanted to update. So I already updated them as of the end of Thursday when we got out of these ETFs, the FXI, the S&P 500, and the dividend dogs of the Dow. And so you can see took a little bit of a hit on all those. And right now I'll just update today, which is the 31st. So we'll go update the rest of the numbers here. So crypto 32,780, 32,780. Gold, $172.61, 72.61. You know what? I'll move all these over to the side. Call that share price. Tips, which is our treasury inflation, and we talked about this. We think that this is probably going to be something to think about. Inflation towards the end of the year. 127.99. 127.99. And then our individual stocks, we'll just keep them around because those, like I said, we're not traders. We don't usually do this for the years, but when you have these huge events, you just have to take money off the table, and just not get completely slammed afterwards. 122.76. So these are more of our individual name that we're going to be holding on for more the long-term window. Which who knows? Maybe they might be the next target for the Reddit users out there. 58.17. So we might see a benefit. Probably not. but one can hope. Extended stay. It doesn't look like stay. No. Am I going crazy here? STAY, right? Extended stay. Why? All right. This is weird. $14.68. All right. And so basically all this money right here, we're going to be putting back into the cash. So that is the $671,000. So for the end of this month, or yeah, towards the end of January, our cash position has increased up to 787. So basically we are quite a bit in cash. All right. So we are all out for this week for those three positions. And then here we're just going to be hanging on to the rest of the other, oops, didn't like that. Rest of the other stuff. One share. All right, so 3280. Let's just carry that down here. All right. Then let's format those all to dollar amounts. All right. So I think we're good. Oops. Let's get rid of that. Share prices, we don't need that. Okay, out, out, out. That looks good. So as of today, our portfolio is at, took a little bit of a hit, but we're still up 180. All right, so let's increase, let's see, that is right there. That's for this, yep, this week. All right, so as you can see, we are 77% in cash.